Good morning, everyone. This is Jeff Malone. Tim is out this morning, so recording this video so you guys can kind of see what we're seeing and talk about what's going on here in these markets. Thanks for watching. If you have any questions after this, please don't hesitate to contact us. This morning, I'd like to start with the wheat chart, and the reason we're doing that is it looks like the wheat chart may be starting to lead this market a little bit. So we're going to talk here about wheat and what's going on here. What I have is we have this trend channel driven up, drawing up from the top that happened back in May to this low at the end of May. And this channel represents a corrective wave pattern off the top of the market here. So all corrective patterns, if they're truly corrective, will stay in a parallel line. So that's what we've drawn up here. And what we're seeing over the last few days is this thing is starting to break out of this corrective wave pattern. And that's why we believe that this wheat market may be starting to lead this here a little bit. It broke out of it. We've tested it several times here, 3 or 4 times, and we're starting to see a little momentum to the upside here today. We always talk, for those that have been around a long time, we always talk about our wave patterns, and the major trends of waves go in 5 wave patterns. 1, 3, and 5 are in the way of the market, the trend of the market. Waves 2 and 4 are corrective waves, and so we just kind of will dive into this a little bit as Tim has always talked about how we use different time frames of trying to see what the market is telling us. We know the fundamentals. We did have a good wheat crop, except for the northern plains where the spring wheat crop is pretty much a disaster at this point. So our bias is up, and we're just going to kind of walk through this and try to show you what we got. So we're going to dive down into the 4-hour chart here a little bit and see how this is showing comparing to this daily chart. So here's the low we had back in July, and if you remember, that daily chart showed a wave 1 move from there. The 4 hours showing the same thing, and we're seeing a pullback here. And so is this a corrective wave 2, or did we start a wave 5 down? And at this point, the 4 hours not really confirming either way. So what do we do from there? Well, we move right back into the hour chart, and I'll pull that up real quick to see what that's trying to tell us. So here's the high back in July on the hour chart. And if you remember the pullback that we've had as we were testing the top of that trend line, here's that pullback. And when you start to see 5s and 0s, just as you did up here, that may be the end of that trend. So as we tested that trend line, we're seeing the end of this hourly move. And what we see right here, so we have a 1 and 2, and now it looks like we're in a wave 3. 3 is usually your most powerful moves, and so that's really giving us a bias that we're moving higher in the wheat market. So that's why we use different time frames, just to give us more information of which direction we think this market is moving. Moving on to the corn chart here. Let's pull that up. What are we seeing in the corn market? I mean, the corn chart is just really just contracting is all it's doing. Yeah, it's been painful a lot. We've had some big ranges, big downs, big ups, and so right now we're getting close to the midpoint of this whole move. In this chart, we've got a flag formation, which is usually pretty bullish. That tends to lead to that trend. The ultimate trend is still going to keep going. Doesn't happen all the time, but more than likely that's the way it's going to go. So, and we also talk about fundamentals a lot. We've shown the U.S. balance sheet a lot. I think most of you kind of understand where that is at this point. So let's talk about what we've seen this week. The crop progress ratings dropped 1% for the week on the good to excellent ratings. So if you compare that to last year at this time, we were at 72% last year. Now we're at 64. We currently have hot and dry forecasts over the next few days. Yeah, there's some spotty rains, and there are forecasts showing some smaller areas are expected to get rains, but nothing widespread during this time frame of, late pollination to early grain fill, where we start to really ramp up our yields. Can we get the trendline yield with ratings below last year, where we had a good yield of 172 with this forecast, and the disasters happening in the Northwest grain belt? And I think that's what the market's struggling with and trying to figure out here. Our biases know we will struggle to reach those ratings and reach those trend line yields where, the trend line yield is 179 this year. Thus, we believe this contracting market is getting close to a breakout. And what we're seeing on that is you're rejecting these higher prices, but we're also rejecting lower prices, and the ranges are getting tighter. So this move is getting closer to being over, and the next one's coming, and we want to keep a real eye on that. Now we're not just going to blindly going to ignore the bearish case, as we understand the financial risk you guys have. That is why we have taken some protections when it broke down here. And I'm not going to pull it up here, but the 100-day moving average is a pretty popular average guys look at. And this thing, moving average, is right in through here. Now, when it closed below that, that's when we took a little protective action, just so we make sure we just don't took a nosedive right there. Now, what we also did is we do have a call above that, so if we do move to the upside, we still participate and keep, take advantage of higher prices here. The market, now, you all know the market can do whatever it wants. Our bias does not matter to the market, but remember what we are seeing in the wheat market. At this time, we don't have any confirmation yet on the lower time frames of corn, which direction this might take. So that's a lot of the reason we took some protective action. But with the wheat market kind of breaking out of it, it's corrective trend. Our bias is up, as we've been for a long time here. Moving over to the bean market, bean markets are doing about the same thing. It's contracting. We're rejecting higher prices, but we're also rejecting lower prices. This is a lot more of a bullish flag than even the corn market is. So, our bias is up. The daily ranges are smaller, and we're right in the midpoint of that whole move. It's a big move. There was a big move to the downside, but it's starting to get smaller, and we don't think this is going to last very much longer. We have discussed the U.S. balance sheet. Our U.S. balance sheet is tight on beans, but you also have to look at what is happening in the markets that also affect bean price. Meal price has taken a hit. But if you look at the bean oil market, it's pretty much following this bean price too. And if you take in the competing market of canola is, a lot of it is produced in the northern territories in Canada. And it's the same thing as corn and beans and wheat up there. They didn't have rains. It's been hot. They're just not producing the canola, and canola oil prices is moving because their crush is just not good at this point. So that's obviously helping us say our bias is up in these. It's also the oil products are helping support the bean market. And if you look at the ratings report on beans, we moved down 2 points this week to 58% good to excellent versus the 72% at this time last year. And we already have a very tight balance sheet. So our bias is what we need to. Our bias is that we need to ration U.S. beans to ensure we have enough for our own crush numbers. We are not rationing at these levels. Again, the market can do whatever it wants. Our bias doesn't matter to the market, but at this point, we do not see any reason to hedge any at this time, as we haven't even sniffed this low back in June. Now, what could derail us from not moving higher? You know, the main thing I think we've got to watch is this Delta variant, how the government responds if we keep getting more cases. Do we get more lockdowns and that sort of thing? Also, we need to keep an eye on tensions with China, not only the U.S., but now you have Great Britain trying to show strength against them in the China Seas and also against Russia closer to home. So we'll keep an eye on all those factors, and we will let you know if we see any major developments and if any action needs to be taken. That's about all I have for you this morning. Obviously, contact us with any questions you might have. Risks of trading in futures and options is very high. Make sure you are financially viable to trade those. If you are, talk to an advisor before any trades get made. Again, contact us with any questions, and thanks for listening.